Don't be shy. Yeah. Okay, well, I'll lead off. So whilst you're thinking of a question, then. So the question is, over the last 12, 13 years, I suppose, since 2000, we've seen a boom in metal prices, and people have talked about a new super cycle that was going to last for 25 or 30 years that replaced the old normal with a new normal. So do you think that the current setback is just a setback on the road of that super cycle, or are we returning to the bad old days of boom and bust over a shorter cycle? Kevin, would you like to lead off on that one?
Yeah, I think we are experiencing a minor hiccup, and I can only speak for molybdenum in the sense that the end-use markets that molybdenum is used in certainly have a bright future. I mean, particularly those pertaining to energy. You know, the world has an insatiable desire and demand for energy, and molybdenum has been a key material in empowering new developments, whether you're talking about shale exploitation and pipelines and production of low sulfur fuels. So you have a dynamic there that, though is stymied now, I think in the near future will begin again its upward trajectory, given again the insatiable need for energy in the world. But also too, from the supply side, you know, the cost of opening and running a mine, as I mentioned earlier, is increasing. So you know, it's maybe in the past things were a lot less expensive. Now, due to various factors, it is just much more expensive to produce materials, raw material inputs. So that also plays a role in maybe putting a floor under prices.
Chris?
I think that in 10 years' time, when people will look at today's headlines about concerns over China and the end of the super cycle, and frankly think, what a load of nonsense. There is no doubt that China will be, and not just China, other areas of the world, India, Africa, they are going to be not just major consumers of raw materials and will remain so, but also major consumers of financial services. And I think the combination of the two together explain some of the logic for the recent takeover of the LME by the Hong Kong exchange. Just finally, I would also agree with Mark and his comments on the growing middle class in these regions, and the shift, if you like, from a savings culture to a culture of consumerism, and that, quite apart from the huge investment in infrastructure, will continue to power demand and pricing over the next decades.
Yeah, I'll sort of add in a few bits and pieces from my perspective. I think it was interesting what Paul mentioned earlier about how the world has suddenly changed with demographics. And I think one of the reasons you're seeing quite a lot of volatility in metals now is that in the 2000s, you've come through a period of strong growth driven primarily by emerging markets. As Paul pointed out, a lot of that was down to Chinese infrastructure growth, but also in other countries as well. It was also down to a lot of growth in developed economies, and again, down to demographics. And of course, now we're struggling with the debt that effectively everybody used to purchase things that were ultimately, most of the time, exported from countries like China. So I think if you strip some of those elements back, what you end up with looking forward is growth, but not growth on the same level as we had previously. The other issue that comes into it is that the world has grown so fast that now, even with lower growth, you're seeing considerable impact on volume. So in percentage terms, the growth in demand for any of the commodities we're looking at today will slow, but in volume terms, that year-on-year growth will still be considerable. On the supply side, you've seen a massive influx of money into exploration and development and construction of projects. Now, with lower growth, you're starting to see some of those projects scaled back or scrapped completely, and a lot of the big major mining companies are doing so. That could lead to a situation further down the line where you get into a repeat of undersupply. However, I think for the short term, it looks like things will probably be fairly well balanced. Interestingly, when you look at the four commodities you're looking at today, particularly for cobalt and molybdenum, most of that comes as a byproduct. Now, what you're seeing in terms of the industry structure is companies are increasingly focusing on the maximum possible revenue from their operations. So you're seeing that projects that maybe weren't previously looked at for things like moly or cobalt can now be a considerable revenue booster. And I think that when you look at KGHM, for example, obviously trying to maximize the most amount of revenue by molybdenum, even if you can produce that, even if the price goes down, as long as you're making a margin, it still generates money for the company. And as Paul Hodges referred to earlier, companies are looking increasingly at ways to continue generating revenue. So I think that there's been a bit of a structural shift in the world. I think growth will still keep coming. I think prices will probably be more stable. But ultimately, that's probably better for long-term growth than what we've seen, and higher volatility, which ultimately damages people's perceptions.
Yeah, I think I would agree with a lot of what you've said. I think the industry has had a very, very good time. The margins at which it was operating were not sustainable. Let's be fair, the margins were so high that they attracted too many people too quickly. I think moving forward we're going to see a more normal environment, and by that I mean margins not so great. The growth is certainly going to continue, driven by the BRIC economies. There's no doubt about that. But you are going to see some volatility. You'll get supply-demand squeezes occurring. When people have problems, they have problems with mines or logistics or whatever. But I think the days of 2006, 7, 8, they're probably gone. I'm not a big believer in the big bubbles anymore. I think we're going to get more realization of in the world. And you're seeing this with the mining companies taking all the impairments, Rio Tinto, Anglo-American, etc., Xstrata, because of the concerns of the values they've paid and the supply-demand outlooks. So I think, yes, positive moving forward, but let's just be cautious we're not moving into big super cycles again. It's going to be more normal times.
Robert touched on this earlier about Paul's presentation about the threat of the demographic threat to Western economies of an ageing population. To what extent are you in agreement with that, or maybe make some comments as to whether that's something we should factor in?
I sort of made a joke earlier. I still have a home. I came from Scottsdale, Arizona. I could tell you there is no loss of buying Ferraris and other toys in the 55 and over set. They are still consuming, even though supposedly during these years they are lowering their consumption. So especially in some developed economies, there may be a slowdown in spending and due to demographics, but I mean there still is a desire to have quality goods. So I don't think the impact of the demographic shift will be as big or as dire. And also we need to take into account other areas of the world that really aren't being focused on. Places like Africa, where you have countries that have blistering double-digit growth that a lot of commentators seem to not even cover. These are areas where you have a young population with growing consumption, and that these are opportunities and areas and regions for growth in the future that we need to take into account. And I don't think we're really taking that as much as we should. into account when we look at some of these demographic models.
Anyone else care to comment? Or? Good. Okay, well, maybe anybody got some questions? Yes, we have.
Yeah, you've talked about the cost of stainless steel. Could you talk a little bit about the chrome moly market, steel market, and how you think that's going to be affected? And today, in the production pricing globally, do you see China having an advantage over other places, or the U.S. having a better advantage, or South Africa?
I can only really talk from chrome. I mean, I don't think there's much. Everyone talks about chrome and advantages. I mean, the big advantage really in China was on the stainless side, and if you talk to most people, it was to do with the production of nickel pig iron and the benefits they got from that and the pricing of that. Obviously, that's very much price sensitive versus the cost of nickel on the LME, and also there's obviously the environmental concerns, and it depends also on the content of the nickel pig iron. I guess, you know, I'm not really an expert on the chrome moly steels, but yeah, I mean, to some degree they must have a little bit of an advantage. But I think, to be fair, the domestic producers of these products in China, they want to try and maximize as much as possible. The problem is the power that the big steel industries leverage. And when you take Jisco, Baosteel, Tisco, they are effectively state-owned steel companies, and they leverage a lot of power when they come to their buying, a lot more than is probably the case elsewhere. And so that influences very much the prices that they get, and people run scared in China. They'd rather make some money than no money.
Just a question for my namesake, Mr. Evans, about the LME, cobalt and molybdenum contracts. I wonder how you see it now. We're a little bit further down the line.
Well, we're a little bit further down the line, but not hugely so in terms of the history of the exchange and the development of new contracts. We've had a very strong year for cobalt last year. It was certainly, in terms of volumes traded, they were twice what they were the previous year. And I think that there's growing acceptance within the market of the LME price as an alternative to some of the published prices out there. The extent to which that price is being embedded in contracts, that's still slow, although it is happening, and the more it happens, the more momentum the contract will gather. Moly's certainly been a lot slower, but I think that we recognise that from the outset.
I know that you did look at chrome, I think, in the past when you were assessing new contracts. Is that likely to come under the spotlight again, or is it you decided it was a non-starter?
Well, I think that for the moment our priority is on building our new clearinghouse. That's due to start up next year, and it really is a case of all energy being directed into that, and other changes that need to be made around the exchange to prepare us for new regulation coming out of Europe and the States. I think for the future, yes, there has been talk about products such as iron ore, coking coal, and indeed ferrochrome. It's certainly interesting to hear Mark talk about the potential breakdown of the benchmark pricing system with the large discounts. And I think that in that sort of environment, it probably does open the way for more innovation in terms of pricing and contract development at the LME. The big caveat, I suppose, would be the ability or there need to be a debate as to whether we would look at a physically delivered contract, and I think that would be exceptionally difficult, versus an index-based contract. And given what we've heard on the difficulties with pricing, I think there'll be difficulties there too. So I mean, it's not impossible, but it's certainly not a priority for us at the moment.
Mark, do you have any comments on it?
Yeah, I mean, it's something which has been discussed many times. I think I would agree with Chris on a lot of what he said. I mean, the other issue is obviously the physical side. I mean, you're looking at an industry which has got a capacity of 10 million tonnes. It's currently running at a run rate of around about 8.4, 8.5 million tonnes. Nobody produces the same grade as anybody else. Yes, you can have a minimum, but then how do you build the premiums in for the different grades and qualities? Because you have low phosphorus, you have low sulfur, you have low silicon, you have high silicon, you have low chrome. And then, of course, it's not like a lot of the products which are handled on the LME. Ferrochrome is friable. It breaks down the more you handle it. And when you handle it, you don't, because of the breakdown, you don't then get the recoveries and the yields as you do with things like molybdenum and cobalt, which are put in drums, or copper and aluminium, which is stacked in, with banding. So difficult one, how you're going to actually make it work. But yes, maybe it's something which is for consideration in the future. But it's how you marry the China and the rest of the world.
Any further questions? Yeah.
I'd like to ask a question. Just in terms of the nickel, cobalt, moly. This is for Chris. Realistically, what does the LME think that the volumes will ever be for these smaller commodities? Obviously, there's been a slow take-up. And if there's been a slow take-up, why should it accelerate over the next couple of years?
I think we never... look, the clue's in the name. They're minor metals. The volumes are always going to be a lot more minor than, say, copper and aluminium. But it was never an intent that they should be large contracts. They stand as an adjunct to other metals that trade on the exchange, and to that extent they enable us to stake our territory in those markets.
Yeah, I've got maybe a question that's could be addressed metal by metal. How much fat is in the system at the moment? So if we do get an upturn in demand, are we likely to see a price spike because consumers have run down their stocks, traders have run down their stocks, producers have cut back production? Anybody like to? Yeah.
I suppose I could do from a cobalt perspective. I think actually you've seen one of the advantages of cobalt is that it's fairly price elastic, and what you've seen is with a lower price you've actually seen some spur in demand, which has been good for the industry and obviously good for new producers and those looking to expand, of which there are quite a few. Whether the industry is significantly geared to a sudden increase in production, I don't know. I doubt it. I think there would be some lag because, of course, it is a byproduct for the most part. That said, as soon as the price goes up, you do sort of tend to see, different sources coming to the market. So you may see, return to higher concentrates deliveries, say, into China, and some of the plants that have closed down or shuttered for the time being reopen. But I think there will be a lag, and I think you would see higher prices until such point that those became economic. But it may take 6 months, a year, maybe longer to achieve balance again.
In respect to chrome, I think anything you're going to see is going to be relatively short term. You've had cutback of 400,000 to 500,000 tonnes in South Africa over the last 3 months because of the power buyback. That can be ramped up very, very quickly. The industry's got a capacity today of around 10 million tonnes, so you've effectively got over 1.5 million tonnes of spare latent capacity. You can switch from silicomanganese to ferrochrome relatively easily, which is one of the problems that we face also in China. So any spike you've got is going to be very, very short-lived at the end of the day. The only thing I would say is that when it comes to the different chromes, then you're into a different scenario, because obviously a lot of the Western producers, they rely very heavily on the charged chrome because of the iron and silicon units, and they prefer that. They give a lot of demerit to the high carbon chrome. So they're very much at the mercy of the South Africans, and in there at the moment there is a much tighter supply-demand balance as opposed to the overall ferrochrome, where there is some liquid capacity at the moment.
In terms of molybdenum, I mean, you have to take it region by region. I think steel makers especially have gotten really good at living hand to mouth and getting just-in-time deliveries from suppliers. There are areas like Japan where there may be some inventory overhang in terms of moly, but if you look at the market overall, especially in the West, you do have thin inventories given the fact that they are sort of working on a just-in-time basis mostly. So if there is a pop in demand, you may have some short-term price pop, but in general they've gotten really efficient.
Okay, any further questions? Well, that neatly brings us to lunchtime.
Yes.
So I'd like to thank all our panel. I'd like to thank you, the audience, and we'll take a break now for lunch. Back at 1:45, where we'll be looking at the online exchange for physical metal trading, Metal Links. Well, thank you. See you after lunch.